So February was very disappointing for Bitcoin.
Today, we're listening to the crypto market update from Plan B, the well-known crypto market analyst, and adding February's data to his stock-to-flow model. Plan B's March 2025 Bitcoin analysis paints a picture of uncertainty following a disappointing February. While the long-term bullish outlook based on the stock-to-flow model remains, recent price action and indicator behavior have deviated from expectations. Now let's listen to the update from Plan B himself. Please don't forget to like the video and subscribe by hitting the bell notification. It really does help us bring you more video updates like this.
So February was very disappointing for Bitcoin. And current situation is a mixed bag. So let's unpack it. Bitcoin dropped to $84,000. That's minus 18% from the 102,000 in January. So the reason for this drop was the Bybit Ethereum hack, $1.4 billion in Ethereums stolen, and that spooked the market. But of course, it had literal nothing to do with Bitcoin. Anyway, the minus 18% dip is a big dip, but it's not unusual for Bitcoin. Bitcoin is very volatile. Even in bull markets, we can have multiple dips that are 20 or even 30% minus. However, it was still an unexpected dip. I expected more all-time highs after January all-time high, and I expected February to be an all-time high as well, above 102,000. So we're really at the crossroads right now. Either we'll have a red-hot bull market, a continuation of the bull market, or we enter the distribution phase into a bear phase. So what will it be? I don't know. That's a big question. Was this the top? And is this dip the start of the bear market? Or will we see a V-shaped recovery and more bull market action? And of course, we have seen a couple hours ago the beginning of a V-shaped recovery following the U.S. Strategic Bitcoin Reserve announcement. But that was, so we recovered about 10% of the minus 80% drop. But we'll have to see how that will follow. If we look at relative strength index, the RSI, it was also down to 63. 63 is green, so that's this green dot. Down 13 index points from 76, orange, last month. So the good news, of course, is that 63 is still above 50, and everything above 50 is uptrend. So we're still in an uptrend. But the bad news, of course, is I expected more or finally RSIs of 80% plus and red dots. That was the expectation. We didn't see that minus 18% return. So a RSI of 63. What seems to be the case, I'm not sure, but it looks like it, that the normal range of the RSI for normal assets like stocks or the dollar, euro rate, the normal range would be between 30 and 70. So everything above 70 is overbought and will revert back. Everything below 30 is oversold and has a possibility of going back. So with all the traditional finance guys moving into Bitcoin, ETFs, etc., I think they are a little bit spooked by RSI of 70 and 76, for example, that we saw in January. So it looks like they sell every time that the RSI is above 70, 75, and then they're hoping or waiting for an RSI, a normal RSI range, so 30, and of course Bitcoin has never had a RSI at 30, and then of course it bounces back. But so So it seems like the traditional finance guys don't have the guts to wait for these big 80% RSI 80 plus moves. But we'll see what happens. Look at that 200-week moving average. The black line is at 45 in February. That's up slightly from 44 in January. And that's the good news. It's still up. I mean, the 200-week moving average always goes up, and that's still the case. But the bad news, of course, is it's a very low increase. And that is very unexpected because if you listen to my last video, I expected this 200-week moving average to curve upwards, to see the increase in moving average getting bigger and bigger. And that's not what we see. We see the increase getting lower right now. So that's something to be looked at later, but we keep an eye on it. Realized price, 2-year realized price. So that's the cost base of the buyers of last 2 years. It's a gray line. The bad news there is it's unchanged at 74,000. So again, I expected, like every bull market, that this realized price line would increase sharply. And here too, in every bull market, the realized price increases sharply. Right now it's unchanged. The good news, of course, that Bitcoin at 84,000 is still above the 2-year realized price of 74,000. And that's like every bull market, this 2-year realized price serves as a bottom, as a floor, if you will, and Bitcoin will be above the 2-year realized price until it drops below, and then, of course, the bear market starts. So the good news is we're still above it, and let's see what happens next month. Now, stock to flow target. My target is still this 500,000 for average, right, for the 2024, 2028 halving cycle. And of course, it's not a point estimate. It has some uncertainty around it. So there's a range of about 250,000 to 1 million Bitcoin. So if the average will be, for example, 400,000 or 300,000 or 600 or 700,000, that's all okay. That's all within this range. It doesn't have to be exactly 500,000. So this target is still a lot higher than most other models, right? Especially, for example, the power law model, the diminishing returns models. Those are all very much lower, even below the 250K lower band of the stock to flow model. So that'll be interesting to see.
Plan B goes on to mention the market is currently at a crucial juncture where the continuation of the bull market or the onset of a bear market will likely determine the validity of the stock to flow model and Plan B's near-term price predictions. The influence of traditional finance participants on Bitcoin's volatility, particularly around RSI levels, is also a notable point raised in the analysis. Now let's go back to the update from Plan B.
And again, we're really at the crossroads now. So either we'll have a red-hot bull market, which brings us into this stock to flow range, or we'll see a distribution phase and then a bear market phase. Yeah, and then, of course, the stock to flow will be invalidated, and other models are more right. But again, I expect more all-time highs in 2025. I expect higher RSIs above 80, red, multiple months of RSI 80, and I expect the moving average to curve upwards and also the realized price to curve upwards. The good news, by the way, is that we just started this year, 2025, right? Only 2 months in. We have 10 more months to go. So let's see what that brings. And as always, models are simplifications of reality, so all models are by definition wrong, but some are useful.
So what do you think? Is the stock-to-flow model still valid? Can we really trust it, and is Plan B's prediction of $500,000 average price for this cycle correct? Thanks for watching, and please do not forget to like and subscribe to the channel. See you tomorrow.